Oh man, what is up, everybody? I am back and better than ever, and I have to tell you, I am so excited for what is to come. And I also want to give you guys an update on why it feels like I haven't been around on the podcast lately, and it's because I haven't. It's because I've been working extremely hard to be able to knock out a lot of the goals and a lot of the milestones that we've achieved, which I'm thankful for, and getting everything going so that I feel like I could be in a really good place to be able to consistently give to you all. On this episode, I actually want to talk about some of those goals, but I also want to give you my 5 tips on how I obtain those goals.
Welcome to Entree Real Estate, where we turn the complexities of real estate into clear, actionable steps for building generational wealth. I've invested into different types of real estate all over the United States, and I run a thriving real estate fund. Join me as we document the entrepreneurial journey of scaling businesses and transforming the lives of tens of thousands of people around the world. Let's turn your real estate dreams into reality. Buckle up, because this is the start of something truly incredible. My name is Devin Robinson, and welcome to Entree Real Estate.
Now, I've been a little bit cryptic on my Instagram stories and things like that because there's certain SEC compliance laws that I have to follow. I actually want to start off with a disclaimer here. To ensure that security laws, it's important to note that I am going to share my experience, our experience as a company, and general advice on capital raising. This information is not intended as specific legal or financial advice for anybody out there, and you should always consult with a professional advisor or attorney familiar with your specific circumstance and applicable regulations before making investment decisions. My past performance is not indicative of future results that you could get, and this is also in no way a solicitation for securities or for our fund. I literally am just telling you guys about our experience and then giving you tips on how you can go out and raise capital as well. I'm really excited because the first thing I want to talk about are the milestones that we've achieved. Now, I hinted a little bit towards it in my stories and things like that, but I really am excited. So as a 506B, that means that we are allowed to have non-accredited investors into our fund. It's really difficult to actually raise capital from non-accredited investors, and it's a little bit frowned upon. Most podcasts you'll hear, people will be like, don't raise capital from non-accredited investors. And one of the biggest reasons why is because you have to have certain thresholds and pass those thresholds financially to hit that accredited investor category. And so what accredited and non-accredited investors are: an accredited investor is somebody who has individually made $200,000 for the last 2 years and for the foreseeable future, or jointly made $300,000 for the last 2 years or for the foreseeable future, or has a $1 million net worth excluding their primary residence. Now, the reason why people will be like, oh, don't raise capital from non-accredited investors is because if they don't have a certain amount of money and they're letting you invest and they're investing in you, typically they're going to be the ones that are like, oh, how's my returns doing? How are my returns doing? And they're not seen as more savvy investors that have invested a larger amount before. And if they haven't invested a larger amount, then when they do invest, they can seem a little bit more needy, or they could be like, please don't lose this. This is my life savings. And you really don't want people like that investing with you, which I 100% agree on. I don't really have anybody like that, but I was speaking to our SEC attorney and he was like, oh, you guys have filled up your 35 slots? Because in our fund as a 506B, you are allowed to have 35 non-accredited investors into your fund. The only caveat is you cannot market your fund. You cannot market the deal or the opportunity that you guys have, and you have to have a pre-existing relationship for people that are coming into the fund. I tried to make it a really huge goal for us to build out that pre-existing part, and you also have to be very serious on how you do it. I have in our calendars when we met people, the notes on how we met people, when we set up an appointment to be able to meet to actually talk about the investments in the fund, because you want to make sure that you are extremely SEC compliant as you are raising capital. Now, back to what my SEC attorney was saying. He was saying, wow, I've done thousands of these. I've helped a ton of fund managers start funds and then continue on with the compliance aspect of their funds. And he goes on and talks about it for a couple of more minutes. I'm not even joking. He was like, it's very rare. I don't think you understand how rare it is. Top 1% of 1% of fund managers that have filled out their non-accredited investor slots. I only get 35, and we filled ours up. Not only did we fill ours up, but I want to talk about the journey of it. I started our fund in July of 2023. That's when I first started raising capital. That is when we first got our first investors into the fund. And then since then, we have raised capital, and now it is April 2024. So in about 8 to 9 months, we raised $2 million into our fund. And we are what's called a customizable fund, which is, we can get into all of that stuff later. But you typically have like syndications and you have blind funds. Syndications are a lot easier to raise capital for because you're like, hey, this is the one deal that we're all raising into. This is what it looks like. This is what the number looks like. There you go. Whereas blind funds are a little, hey, give me your money. I'm going to invest it into this and you might see a return. And so there's a lot more risk to that. And it's a little bit more of, I don't even know what they're really doing with my money because it's not on one specific deal. And so we were a blind fund. And on a podcast, I also heard a prominent fund accountant say 87% of all blind funds never get past $500,000 capital committed, which is wild. So 500,000, they never get past that. Whereas we've gotten to 2 million in the first 8 months. And the only reason we stopped at 2 million is because I told our investors, hey, one, I value our early adopter investors. And two, I want to make sure, because I have a fiduciary responsibility to act in the best interest of our investors, I want to make sure I can give high returns at that 2 million mark. So I'm going to pause subscriptions or pause any new investors for the next 3 months. And so we are in that season right now where we have paused our subscription for the next 3 months so that I can double down and one, just say thank you to our investors that we currently have to be able to give them more of a return for the next 3 months so that more investors don't come in and dilute the shares of ownership that they have so that they can get really good returns, because I know that once we hit that 2 million mark, it's just going to take off from there. And so I just wanted to take a little break, make sure we can get those returns for those investors, and they'd be extremely happy. So that's what we've decided to do, and it's been really cool hitting those milestones, learning and growing. So what I want to do right now is share with you guys my 5 tips on raising capital, on how I've done it, because really we went from 0 to 2 million in the first 8 months of capital committed. And then in our fund, there's certain criteria for that, but we get to hold that capital and we get to use it. I want to talk to you a little bit about that and some of the ways that really impacted my capital raising and got us to where we are today. The number one thing that I will say is you have to have a mindset shift. A lot of times initially we think, oh my gosh, I'm going to go out and raise capital. I'm going to ask people for money. People are going to be like, oh my gosh, stay away. Why are you asking me for money? And that's how I thought about it in the beginning a little bit, honestly. And it wasn't until I had this mind shift of, wait a second, I'm giving people opportunities that they never have otherwise, especially non-accredited investors. I'll have people come up to me and go, wait a second, why aren't more people doing this? And more people aren't investing into funds like mine because typically most people don't have access to these type of funds. In this context, these type of funds are usually only open to accredited investors. And so then only accredited investors can get in. And usually the barrier to entry is very high. It's like $100,000 minimum, $500,000 minimum, but the returns are typically also very high. And that's just the way that funds are, but people don't have access to them because they're usually open to accredited investors. And so that's where I had to shift my mindset of, oh my gosh, this is not me asking. This is me giving people an opportunity they wouldn't normally have. People want to invest into real estate. They don't know how to invest into real estate. And so this is a great way to do that. And usually as I walk people through this, they're like, wait a second, this is actually better than just investing into real estate on their own, because how equity funds work is people actually buy shares or units of ownership in the fund. So then they get to take depreciation off of the rental portfolio in the fund. And they also get to participate in profit shares with certain funds that offer that, so that it's almost even more beneficial than actually owning real estate is participating in a fund like this. And so I was like, man, I'm giving people the opportunity to participate in something that's way better than anything that CDs give returns on or the stock market gives returns on, because we're actually learning together, we're growing together, and we like to coin this term experiential investing. And so I'm giving a huge opportunity with a great experience that people wouldn't normally have before. And so I actually am like, man, it's actually the most ethical thing for me to do is to tell people about this, because they wouldn't normally be able to do that. Because if I believe so strongly in what I'm doing that it is the best thing for somebody, then it is the most ethical thing for me to do is to tell them about this thing. I just started being like, okay, here's an opportunity that we have. This is what we're doing. And this is how you could participate in it. And this is what you could see as the result of it. And it's really cool to be able to give that as an opportunity and go, hey, look, you don't have to do this. We're like filling up. I've paused. Don't worry. But if you're interested, let me know. And so it's just a cool opportunity for people. Number 2, leverage social media. Now, depending on if you are a 506B, 506C, you can market your fund as a whole if you are a 506C. If you're a 506B, you have to be a lot more careful about that. So for me, you never heard me talking about our fund. You never heard me talking about returns. You never heard any of that stuff, but you saw the journey of the properties that we're buying, the journeys of the lives we're changing, the journeys of the deals that we're doing as far as a company, but not any of the specifics, of what people are getting on returns or how people can invest in these things. It wasn't any of those specifics. It was just being a part of our journey, inviting people to be a part of the journey as a whole of, oh, if you're interested in real estate in general, we would then have conversations with people that I knew that were my friends, or we'd build up relationships beforehand and then talk about the fund. And so that's how we used social media, as people began following the journey, falling in love with what we were doing, wanting to be a part of it, wanting to be a part of the impact that we were making in the world. And then those are the people that you want to be your investors, because they're not there just to give you money. And that's what I'll tell people. Your money will make money, whatever. But the impact that you're going to make on the world is way bigger. And that's the most important thing in this. That was probably one of the biggest things that allowed us to scale quicker, was the impact that we were making, the people wanting to just partner with us. Number 3 is reconnect genuinely. I began reconnecting with people that I haven't talked to in years. And I didn't do it in a really sleazy way where I'd go, hey, how you doing? Good. Oh, okay. You want to invest into what I'm doing? That wasn't the thing. What I would do is I would go in and I would be genuinely interested in them, genuinely interested in what they're doing. There's a quote that I love, and it says, interested people are interesting. And so for me to be interested in somebody else, then they become interested in me and what I'm doing. And so I just became genuinely interested in people. Hey, I haven't talked to you since high school. And then I would look on their Facebook or on their Instagram and be like, I saw that you did this. What was that like at Disney? Like, how was Disney? Give me some advice. We're thinking about coming the next month. What did you end up doing? And we talked, and they said, oh, what are you doing with your life now? What's going on? And they tell me what they're doing, and they ask me what I'm doing. And this is one of my favorite things. This is also like my little elevator pitch too, is people go, oh, what do you do? And I go, I help people to passively build generational wealth by investing in deeply discounted real estate. And people will go, oh, that's cool. And those are not my people. But then people will go, oh, that's interesting. I'd love to hear more about that. Then I know those are my people. And that's how I would sort that conversation. I'd have these conversations with people for a long time, and they'd ask me what I do. And I'd say, I just help people build generational wealth through passively investing in deeply discounted real estate. And they'd say, oh, that's really interesting. I'd love to hear more about that. I've been thinking about investing into real estate. Boom. There you go. There's an in, there's a lead right there. And then begin to nurture them and be able to follow up on them is so key. And so we'll talk about that in the next point, but it really is that intro on being genuinely interested in people, and your tribe will come. The people that are interested in what you do will come. Most people, it's great. You guys reconnected. That's fantastic. I also had a bunch of people come back to me later after those conversations. So I actually had a spreadsheet, and I went through all my Facebook friends. I'm not joking. This was like day 1 of capital raising. All my Facebook friends, I looked through every single friend and I put them on a spreadsheet for the ones that I think would be actually interested in investing in real estate. And then I think it was like 400 of them. It was a ton. And then I just began messaging them and commenting and following up and reconnecting with them. And it led to some really good conversations. And a lot of them didn't invest, and that's totally fine. But it did reconnect that. And then I have a lot of them keeping up with what I'm doing now. And so you just never know, because they start to spread the word, and the word just spreads like wildfire. Okay, number 4, automate engagement. This is huge. This is like one of the biggest things you can do, is when you grab somebody's email address and say, oh, hey, I'd love to send you a little bit more information. Let's chat, all that stuff. Grab their email address, literally, I'm not even joking, create an email automation in something like ActiveCampaign, Go High Level, wherever you're in, MailChimp. Just create an email automation for those people to go into some sort of drip campaign that just keeps you top of mind. And so for you to just give value, for you to walk them through, not even just like investing into your fund, but like real estate in general. Maybe it's the market. Like maybe just based off of your personality, maybe you're more of a data analytics driven person, and you want to every month give a really quick market update on what's going on, what the Fed is doing, what interest rates are doing, what the yield is at, just whatever you like to do. You may be doing deals and you're like, oh, here's a really cool deal. But if you're going to like share deals, share stories of the deals. So for us, we walk through foreclosures, we talk through this idea of people over profit, or we even say now people through profit, because the only way that we really can scale up our impact in the world is to make a profit. but because of our profit, we are able to help more and more people. And so sharing that story of how we help those people, sharing the story of the way that people's lives are being changed, that's really huge to be able to share with your investors. Creating those automations that keep you top of mind, keep people coming back and hearing your stories. And then also it brings in this sense of FOMO where people are like, oh my gosh, I want to be a part of what they're doing. I want to do that. I want to create impact, because the money will make money. But if for them to have an impact with their money and for them to be a part of something bigger than themselves with you that they wouldn't normally have the opportunity to be, is so huge. And this is a really cool hack, like a really cool hack. So like highlight this part. We also have an automation for people who we don't know as much. And in that automation, it's, oh, here's who we are. Here's who I am personally. Here's our team. This is what we do. I foster kids, all these things to give them a baseline understanding of who we are. And then they're implemented into this drip campaign that also is, this is what we're doing. These are the lives we're changing. And so then it gives them an underlying understanding of who we are. And the SEC requires you to have some sort of pre-existing relationship. They want investors to have some sort of pre-existing knowledge and understanding of who you are so they feel comfortable investing with you. It's such a gray area, but that's the gist of it. And so for us to be able to give them that information in a drip campaign, now this is like super next level. A lot of these systems allow you to score people based on what their activity is in their email. So what you could actually do is you could actually score them. Let's say they open this email, click this link, then they get a certain score. And then I could say, all right, now send either a webinar or send them a link to schedule a call to talk to me about investing only after they hit this certain score, because now I know because of that score, they've seen this many emails about us, watch these videos, and have some sort of pre-existing knowledge and understanding of who we are. So that allows us to almost scale the pre-existing relationship aspect of it, which then allows me to have a conversation with them about investing with us. There's really cool ways to automate this engagement that then allow you to raise more capital. Number 5, prioritize transparency. This is very key for us. I let people know, hey, this is our first fund, but this is what we do. And then also, these are all the deals and these are all the economics. And this is how this all works out. And here's a P&L and a balance sheet and all of these things so that you know exactly what your money is doing, so that you're not wondering, oh my gosh, is my money making money? Is it doing this? It's so important for us to have transparency. And that's one of our core values. And that's what we make sure that they know. They could always text me. They could always log in and check on what the progress is. They can always click this link and see what all of our deals are and what all of the analytics are. They can always request P&Ls and balance sheets and see where we are on all these things. Hyper transparency. And that allows them to feel comfortable investing with us, because our fund, you got to invest a large amount of money just to get in. So for them to be able to know and see and understand that and exactly what their money is going to is a really big deal, especially in a investing culture where they're just used to putting their money in and just crossing their fingers and hoping one day they see a return. And so for us to bring that sense of transparency is really key. Now I'm going to give you guys a bonus, because this is actually one of my favorite and what I think is actually the thing that's caused us to jump so much. A lot of you guys know Alex Hormozy, and pretty much the whole premise of his marketing and what he does is creating offers so good that people feel dumb not to take them. We've created that in our fund. We have really cool early incentives that for the people that were in the first 2 million, they got early incentives. Now, those early incentives don't exist anymore, but we still do have another incentive that's really cool. This is insane. One of our so good you feel dumb not doing it is, if you invest a certain amount with us, and it's a lot, it's not like a little, if you invest a certain amount with us, we actually, because of how good we are at getting deeply discounted properties, we actually will gift you a property. We will literally put a property into a rental portfolio for you. Here's the catch to it. You will still get your returns along the way. You'll still get your returns on that money. So it's not or, it's and. You literally will get your returns, and you are going to get a rental property that you can do whatever you want with it. We go through the process of going, hey, where do you want it? Do you want it to be rental cash flowing, or do you want it to be more like an appreciation thing? And so then we go, here you go. And while you're investing with us, if it's a long-term rental, we'll manage it for you. If it's a short-term rental, then like you manage that. And then once you stop investing with us, then you manage it as well. But you could also do whatever you want with it. You could get that property and sell it, or you could also get that property and you could keep it as a cash flowing rental. And so there's so many really cool things that we try to create, that we try to make it such a no-brainer to invest with us, because we want to make offers so good people feel dumb not doing it. Now, here's the whole premise on why I want to do this. People will tell me, when I tell people our fund structure, people will go, whoa, you guys are giving away a lot. You could be making a lot more money with a different fund structure. Yeah, we could, but my play is, I'm going to be doing this for the next 40 years of my life. I'm going to be doing this forever. I would rather make not as much money right now to play the long game. And what I mean by that is, we make the offers so good right now that our investors are going to tell their friends, and they're going to tell their friends, and they're going to tell their friends. And then we're going to have so many people that come in here that we build a track record, that we build trust with, that as we grow and our structure changes a little bit, it's still going to be really good, because that's just who we are. As it changes a little bit, people are going to stay with us. So we're filling the funnel of investors on the front end that are going to be lifelong investors with us. And so as we go, the structures are going to change, but the trust is going to continue to grow and be there, which is fantastic. And that's what I'm most excited about. Is, sure, this first fund is going to be what it is, and people are going to love it, and it's going to be really amazing for our investors. And then as it goes, it's going to balance out, but the track record is going to be there. The returns are still going to be there, and it's going to be such a full funnel moving forward that we'll never have an issue raising capital for anything. And we're always going to have a ton of investors with a ton of trust and a great relationship with. It's almost like I am on the front end working as hard as I can to build that relationship, to build a ton of investors for the long run. That's really a bonus tip that I would live and die by, because it has been absolutely amazing for us to be able to scale up what we do. Now, I hope that's helpful for you guys. We have done some really incredible things over the last 8 months. And as you could tell, like, I have been head down working extremely hard to do so. And I'm excited to jump back in here and share a little bit more of that journey along the way with you, what we're doing, and then even recap what we've done. Thank you so much from the bottom of my heart for being here. You mean the absolute world to me, more than you will ever know. And if you like this at all, if it was helpful for you, please leave a comment. Please share it, subscribe. This could be helpful for somebody else. And if you leave a review, I will also shout you out on the next episode. And so thank you so much. From the bottom of my heart, I appreciate you. I appreciate your time. I appreciate your attention. And I look forward to this journey with you. And if you need anything or have any questions, please reach out. Happy to be here for you. Thank you so much. Enjoy the rest of your day.